All right, well, hey there. Good morning, everybody. Christopher Inks with Texas West Capital. It is just a few minutes after 11 a.m. Central Standard Time here on Friday, the 7th of October, 2022. Good to have you all joining in. Had the NFP release this morning. Now, what can we say about it? I think the consensus... I had the hiccups this morning. Give me just a minute. All right, let's try this again. I think the consensus was right around 250K new jobs. Slightly more than that, 263,000. Let me make sure I got my notes here. Let's see. So one of the big things, though, the average hourly year-over-year earnings missed. They were looking for 5.1%. They only got 5%. The average hourly month-over-month did hit its expectation of 0.3%. Unemployment rate surprised with a drop. It was expected to be 3.7%. It was down to 3.5%. I haven't had a chance to dig into it, but remember the rise there to 3.7 was likely due to the new people filing for unemployment. So basically, remember, unemployment is not how many people actually are without a job. Unemployment just tracks how many people are actively looking for a job and don't have a job. Well, don't have a job and are actively looking for a job. So that rise in unemployment last month, up to 3.7 there, seemed to be due to an increase in people claiming unemployment. So I've got to check and see, again, dig into it and see if maybe there was a drop in that, again, coming here that might have affected that. But, again, the Fed... it's doing its thing. It's really concentrated on this whole inflation thing. We talk about what does the Fed really need to see, and if you could see, we look at that headline number, that 263, right, and that's usually the thing that gets the most attention. But I think the Fed needs to see more of that. Maybe the unemployment rate continuing to rise. Needs to see a drop in that hourly, month over month and year over year wages there, because basically, what that means is, you've got less money out there to be spent, basically, by people work is what it's saying. Which so you less dollars chasing after the same goods, right? So prices should, react negatively to that. In other words, prices should drop, right? I mean, if you've got if you're not an economist, if you don't like economics, what did you still learn during the pandemic? We learned that supply chains reduce the available products, right? And if you have more money chasing those that drop in available products, the prices are going to rise, right? The problem with inflation is that it tends to be a bit sticky, right? And so if we look at, and this is even, again, a lot of what went on with the rise in prices was the fact that we had those supply chain disruptions, right? And so it lessened the number of goods that were available for purchase, right? But at the same time, so that was already rising, working on prices rising, right? And then at the same time, the government comes in and says, "Hey, here's some checks. Here's some extra stimulus checks. Here's you don't have to pay your if you can't afford to pay your mortgage right now, that's all right. You ain't gonna get kicked out. We're gonna make sure it doesn't happen. You know what? Your student loans, you don't have to pay them right now for the last 2 years now, something like that. Probably going on 2.5 years now, I guess is what it is, right? And so, that ended up meaning that people had more income coming in, even in the pandemic. The rise, also the unemployment. There was all that extension and additions on the unemployment. So people could continue spending money, but they could do so in in markets in which the supply of the available supply of products was dropping, right? And so that's what we get. So I guess what I'm trying to say here is that, often inflation, that CPI is more sticky. It doesn't come down as easy. Now, I just read an article here on Oh, let me see if I can find it here real quick. On risk.net, I believe is what it was. Excuse me, let me see here. I cannot find that. Well, yeah, I believe it was on risk.net. And they were talking about the market was pricing in the likelihood that inflation would drop faster. So, because basically in the markets, there's all these futures and all these things, right? Basically people betting on what's going to happen, right? And so it was like the market was pricing in that inflation would drop sooner than even what the Fed says, right? Which is something we've been talking about. And that seems to take the buy side by surprise right now. So, a lot of people on the buy side, again, focusing on the fact that CPI often, that inflation is often more sticky, focusing on that and saying, well, I think the market's got it wrong. But, the market itself, like I said, is looking at, right now anyway, at inflation, coming back down sooner rather than later. Now, everybody's still kind of stuck on that 2%. That's what the Fed's whole target thing's been, right? So if you guys were watching the Fed from 2000, after the great financial crisis, 2009, they're up to now, that the Fed kept trying to reach that 2% mark over that decade. And I think it came close like one time. We had two deflationary periods, I think right around 15, 16, and then right around 19. But the Fed just, the Fed couldn't do anything. And this is what I keep telling you guys, the Fed is always reactive, not proactive. And they don't really change the trend of things, right? They just kind of jump in and exasperate whatever's going on, right? So they had all that. And then, of course, pandemic comes in and things start rising. You get the supply chain bottlenecks causing, prices to rise. And then you got government coming in and saying, hey, you don't have to pay these bills, your biggest bills, right? Your mortgage, your rent, your student loan, right? But in addition to that, here's money. And hey, if you lost your job, here's more money than what we usually give you, right? So all this kind of goes on there, and the Fed's like, okay, well, you know what? We're finally getting inflation coming up toward that 2% that we want. So we're going to let that thing rally on up 4%, whatever. And we're going to make sure it sticks up there a bit. So that way, when it comes down, it finds support at that 2% area. And hence the Fed's, slow track in here to try and do anything, right? And then of course they finally come in. And when they come in, so this is the year they finally come in, right? And as we talked about last year and then leading into this year, everything's happened exactly as I've been talking about. And so now we're at that point here. Okay, so the Fed's had this 3 months in a row of 75 basis point rate hikes. And we're, it comes up the end of Q3, beginning of Q4. And this period here is where I was talking about back in January, in December of the previous year, where I was looking at potentially being, the last of the big pushes in interest rate hikes. And not that we won't see interest rates continue to rise, into 2023, but just that they would do so at, 50 basis point, 25 basis points coming in. So now we see, was the end of Q3 last month, was that the end of the 75 basis point rate hikes, or do we have one more here at the beginning of Q4? So again, this whole same period I was looking at, to do it maybe one more time. And so if we look at the FedWatch Tool here, let me see. There we go. So this is the market. Now this has jumped up since this morning's release. You remember earlier this week it was right around 50 somewhat percent. This is a 75 basis point rate hike. This is a 50 basis point rate hike. So it was, like 52% on the show on Tuesday. As of yesterday and this morning, it was right around 75%. It's now up to 84%. So, the market generally expecting this right here. So what does that mean? That means if we get a 75 basis point rate hike, shouldn't be any real big deal. The market's pricing it in, the market expects it. It is what it is, right? If, for whatever weird reason, it was 50 basis point, you would see the dollar kind of get hammered, and you'd see risk assets jump on and rally pretty significantly. Now, based on the data, I think I'm probably in this camp that we've got another 75 basis point rate hike. If we look at the PCE last month, the CPI, we look at unemployment. Now, here's the thing about unemployment. So 3 months ago, back in let's see, was this September, August, July? I believe it was July. We had 526,000 new jobs created, right? And that was huge. Remember, I think that came with like a decline, like a miss in the month before, and then the July was that 526, a huge jump, right? And then it came back down in August at 315,000, and then last month, which is those numbers we got today, are 263. So even though we beat the 250 expected, we're still on this downtrend over the last 3 months, from 526 to 315 to 263. So we see the number of jobs being created actually dropping off, and I think that's a positive thing if you're looking for the Fed to lower the interest rate, or I'm say lower the interest rate, lower the rate at which they're raising it, right? I mean, we're still probably seeing 4%, 4.25 at least, coming up into next year. But you want to see this new job creation kind of coming down, because that takes pressure off the Fed to continue doing that, right? Because what does it mean? It means less new jobs being created, which means less people being hired, which means less money getting into people's hands to be able to be spent, right? And so less money chasing products generally should work in prices coming down, right? And so, that's what we're seeing. But I think, again, going back to what I was talking about at the beginning, I think really it's that core CPI, so that, minus like food and energy, we really need to see that kind of coming down for the Fed to really go, okay, yeah, we can slow it down a bit. And then, so the question is, and we'll look at the oil chart here in a bit, but the question is oil topped out, or does it have one more push higher? And so a lot of people are thinking, oh, it's got a lot higher to go, actually, $300 a barrel and whatnot. I think if it was to push up, we're not getting that. I think we're looking like, I'd have to look at it again. I think maybe like 165, 170 maybe. Assuming that this recent drop was, wave 4. So we'll take a look at that. But, again, if that's rising, then you're going to see CPI continuing to rise, right? Because the two biggest contributors to CPI overall, is basically your real estate, your mortgage, rent, whatever, and then your oil, right? And but used cars is in there as well, and those are dropping. We see prices dropping on that. I've seen some information here lately looking at potentially like a strong drop in used cars, used car prices, potentially coming up here, just like a rout in the market coming up. So I don't know, that would be interesting. If you're looking to buy a used car, that might be something you keep in mind, right? So I mean, we got a lot of stuff kind of going on. But over the last few months, you've got some things going up and then coming back down and then going up and then coming back down. So you've got this kind of potential that, things may be topping out. And so we're going to watch it, continue to watch and see if that happens. If the market feels like they are, then, you're going to see risk assets, during all this time potentially have been building support, right? Getting some accumulation going on, and then potentially higher, right? But we'll see. We'll see what goes on there. Who's all here already? Silvio, good to see you. Bitcoin anarchist, I see you're checking in there. HJ, what's up, man? Hank's getting chicken from the stove. Brian Riley, good to see you. Data, TLRY. Who else is here? Nevlusian, Crypto, MTNS, what's going on, man? Hank says Fed is fighting for lower wages. This cost push inflation, mostly outside the circle of influence of Fed as it is global. Well, the Fed doesn't really have a whole lot of control over anything anyway. I mean, I always talk about that. I know people still continue to believe it does, and I don't think there's really a whole lot I can do to convince you otherwise. It's just one of those things that when you start looking at it a little bit differently, if you look historically, they really don't have any control over anything. They give, they just kind of exasperate whatever's going on there. So, hey, Mr. Wilkes, what's up? You said you're buying a used car this weekend for the missus? Oh, man, yeah, I know. I'm looking to buy some. I don't ever really buy new. I don't remember the last time I bought a new vehicle was. It's so silly to buy new, guys. You're losing like 20, 30% the minute you drive it off the lot, right? So I usually look for something that's a few years older, a couple years. after that initial drops off there. So I'm personally looking for something right now as well. So, but I don't know. I'm kind of, again, if that's going to happen, if we're going to get that drop in used car prices or not, why spend more money than you have to, right? Let me see here. Okay, so there we go with that. By the way, hey, listen here, guys. Again, as always, if you want to join us, you can do so here at howtotradetowin.com. We've got, we're in the process of changing our tier 3 model a bit toward more of an overall coaching model. Prices will reflect that soon. But if you're in there before then, we're just going to kind of grandfather you in on it. So, if you thought about joining, that might be a reason to do it. If not, I mean, of course you feel free to join later, but price is going to go up. But, again, it's going to be a lot more the coaching actually and getting you in there. Again, we focus on price action, we focus on Elliott wave, and we focus on Wyckoff. But the one thing I'm going to add in there is my system of trading. Something I've done for the last 5 years. I've always talked about, I don't want to be that guy that goes out there and says, listen, I've got this system. It's better than everybody else, and it's the only way to trade. But you guys keep telling me you want to know. You want to know. You want to know. And so, we're just going to add it in there. We're not going to take off of what we already do. I think there's a lot of stuff to know. Even if you're not a straight-up Elliott wave trader or you don't ever want to be or Wyckoff or whatever, there are things you can pull out of those that even if you're just a price action trader will just help you immensely. Understanding, guys, I don't think you guys really recognize the importance of Elliott wave. The idea that things move in a certain way, that there's no reason to FOMO or to or to just be scared, to drop, because you've got ideas as far as what may be happening. Fear comes from the unknown, right? Elliott wave is a great way. I mean, whether you go through us or anybody else, I'm just telling you guys, I think Elliott wave is just a fantastic thing for anybody to know. Even the basics of it, just understanding how price, tends to move, because the market is organic, guys. It is organic. It is people, right? And you're like, oh, but there's high frequency trading bots. Well, yeah, but they're programmed by people, right? And with people's conceptions or misconceptions of how things work, right? Which are based on their own psychology, their own emotion. That's one thing people don't seem to get. They're like, oh, well, that algorithm is in there doing its thing. Well, yeah, it's doing its thing, but it's based on some ideas, the way that person already views the world, already views the market. And if anything in there is influenced by emotion or psychology, their psychology in particular, whatever, the algorithm, yes, it's going to do its thing regardless of any later input, right? But it does so biased to whatever that person that programmed it is, all right? And so I think this is one thing a lot of people don't get with it. So, yeah, I think it's just a lot to learn from that, which is why, for my masterclass there I'll be teaching on Monday in Vegas at that Web3 Expo, it's gonna focus on what Prechter came to coin as a socioeconomic theory, right? And how it relates to finance and markets, and the idea that if you understand that, you can get in before the news actually hits. If you've been with us for any amount of years, you guys know we're often in before big moves happen. And I mean, over the last year and a half or whatever, I think Naked was one of our best trades, and that thing was just huge. That thing was so huge, and we got in almost at the very bottom, prior to any news, anything popping out. So yeah, I think there's a lot in there, regardless of how you do it. But anyway, yeah, you can join us here. We'd love to have you there. Let me see here. What else do we got news-wise? Let's see here. Beat vague. Looking at the weed chart, you're talking about old Biden pardoning simple marijuana possession charges, right? Federal law, yeah. By the way, guys, if Congress were to move up and say, okay, you know what? So here's the issue. If you guys don't know, in the U.S., marijuana is a class. Oh my gosh, class 1? Is that what it is? It's basically at the same level they put heroin at. It's just stupid. Now, I don't smoke, man, and I never have, and I have no desire to. But, some things are really stupid. and kind of putting marijuana on the same class schedule as heroin, which is at the very top, right, of the thing. It's just stupid. So I kind of posted a little comment there on Twitter, I believe it was yesterday, about it. And my thought is, okay, so first step is you go out there and you pardon the simple marijuana possession charges, right? The next step is, and if it happens, is going to be quite significant, I believe, for marijuana stocks. And that'll be, reclassifying, taking it out of there, no longer making it what it is. Better yet, making it... So here's the thing. There's a difference between something being illegal and something not being regulated at all, right? And so I think... I don't think Congress would come in and make it legal, or I'm sorry, being legal and not being done at all, right? So right now it's illegal, obviously, federal offense, right? I think that Congress would actually just come in and just say, okay, they would just roll back that it's illegal. They wouldn't say it's legal. They wouldn't give it, law that says, okay, it's legal, but they would just leave it, right? They'd take it off illegal. Now, the thing about that is if they just do that and they don't say, okay, it's legal, then your states can come in and they can push apart whatever laws they want. Texas could come in and say, okay, we want it illegal in Texas, right? You could do that. But if Congress comes out and says, okay, you know what, it's legal, long-standing Supreme Court authority, confirms that federal law, based on the Constitution, supersedes state law. And so if federal law comes out and says, listen, it's legal, not that it's just not illegal anymore, but that it's actually legal, then at that point, states can't make it illegal, right? And so what have we seen? We've seen over the last few years, basically the Fed has turned a blind eye to all the marijuana businesses and everything going on, right? It is still illegal, guys. Make no mistake. The Fed can come in at any point and throw people in jail for producing, selling, distributing, using marijuana, right? But basically they've chosen not to, over the last few years. So again, my whole point in my post was, it would bode well for MJ stocks if we see follow through, and that follow through being that they would at least make it, they would at least roll back the illegality of it, right? And now it would be huge boon if they said it was legal. But if they can at least say, hey, listen, it's not illegal anymore at the federal level, I think there's a lot of money to be made long term with potentially made with marijuana stocks. So yeah. Let me see here. Brian says, even though the jobs numbers are semi-okay, a potential big negative signal for our economy will be December spending numbers from the inflation affecting holiday sales. Yeah. Exactly. We've got that coming up. We got holiday coming up, guys. And I know there's a lot of reports. Expectations are down, significantly, which you would expect them to be. Last year, everybody had free money, right? Didn't have to pay certain bills, had free money. Prices were up, But this year, we've kind of got that opposite, right? Prices are still up, but don't have all that free range of money. We don't have, you still got to pay your mortgage right now. You don't have to pay, but you will have to pay your student loans come in January, right? So, yeah, I think I've been watching that as well. I'll be watching that, Brian. That's a huge thing, for sure. Let me see here. Hank says the Fed's deliberately crashing the economy. They say so out loud nowadays. They need the people to be poor and unemployed, or at least very afraid of becoming either. I think it's the wrong way to say it. They don't need people to be poor or unemployed. They just need people to stop spending. Now, if it takes making them poor or unemployed, then that's something else. But I mean, they don't need them to be poor or unemployed. They just need them to not keep spending money like they were. So yeah, I mean, that's what you do though. I mean, that's what the Fed comes in and does, right? It goes in, raises interest rates to make it more expensive to borrow, to make it more expensive. And if it's more expensive to borrow, then it's more expensive to do business because, let's face it, we're a debt-based economy, right? We live on debt. That's the way it is. So yeah, if you want people to stop spending money, make it more expensive, right? To do so. Let me see here. You only heard what yesterday for the first time, which is insane, Hank. Let me know what you mean there. He says they need people to stop earning a high wage. They really say that a lot. Yeah, exactly. That's what I'm talking about, that month over month and that year over year average hourly wage. That's why we're watching that. You want to see that dropping off. Yeah, that's exactly what they're looking there. Feds could also just confiscate firearms of anyone in the state who can be proven to consume, like with medical cards, license, blah, 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 because they've lied on their federal firearms forms. Yeah. Lots of far-reaching effects off that. Sure. Jurisprudence is meaningless with the new SCOTUS. It's always, okay, and I don't mean that to be rude, that the laugh there. So you get a whole different understanding of how law actually works when you go to law school. I'm a highly intelligent individual, right? I had a couple master's degrees even before I went, right? But I went for the reason I went, which was to understand from the inside how law is actually done, right? And we want to say, standing outside of law school, you want to say, jurisprudence is meaningless with the new SCOTUS and, whatever, and all this silly stuff. But when you actually get in there and you take con law, and if any of y'all are lawyers or have been to law school, you know what I'm talking about, right? You get in there, you take con law, and all of a sudden you start understanding that, as with anything else, even though there are, things that are said, right? At the end of the day, your guys in the magic black robes, right? Guys and gals, are still basing decisions on their personal biases. As human beings, we can't not do that, right? We always talk about that's the way to go, but we always do it. In trading, we shouldn't be trading based on our biases and our emotion or whatever, but we often do, which is why risk management is so important, right? So it's not that jurisprudence, I would say, it's not that jurisprudence is meaningless. It's just that the way in which they approach the law based on their personal biases can cloud the way or change the way in which they see what's been said or what hasn't been said. Again, law here in the U.S. is just very bigly, based on former law, right? I mean, it takes a lot to actually change law, or at least get a different potential ruling, depending what, well, we're talking about Supreme Court here, but, if you were talking about district court or something like that, it's crazy the way it works. But at the end of the day, the best way to understand is that we're all human beings, and we all have we all have specific biases that we most of the time don't even realize. In that bias, whatever it is we're thinking about or talking about, our bias affects how we view the question or how we view the answer, the result. And I noticed this even prior to going to law school when I went through my first 2 master's degrees. When we looked at things that were actually, when you looked at papers that were published, and you looked at it, and I started looking at the thing was, because you go and you go, well, why does this one paper say this is proven, and this one says it's not, and this one says it is, and it's all about how is that question worded. So when you go back up to that and you work backward at that, and you start understanding that it's the person's bias and the way in which they word the question, which comes up with the results, which means that you can do the same thing. 2 people can do the same thing and not come up with the same result because they're viewing it differently. But, and that just goes up to the magic black robes there. So, yeah. Let me see here. Common Man Crypto, I appreciate it, man. Thank you. It says, since you mentioned the pot stocks, TLRY pump again, I was considering buying shares and selling at the money calls, reinvest the premium into SPY or something, just an idea. Yeah, let me take a look at that here in a minute. You guys, you and somebody else were asking about it. Big Vape, I think. Remind me here in just a few minutes, and I'll pull that chart up. Let me see here. Oh, that weed is like heroin, Hank, is insane. Yeah. Again, personal biases, right? I happen to be raised, any of y'all that are around, that 40, 50-year-old area, you remember growing up in the 80s with Reagan and Mrs. Reagan's Just Say No program, right? Didn't really do a whole lot to stop drugs. But, again, kind of interesting the way that all kind of works out decades later, right? Randy Jarvis, what's up, man? He says, this scarcity-based inflation, not pull inflation. You're too smart to not know that. I think you're talking with Hank there, right? Deadly123, what's up, man? Happy Friday, buddy. And then, okay, yeah, you guys are answering there. I'll catch up with you here. Have I read the dissents on the Roe versus Wade reversal? Yeah. I always keep up with that stuff. And again, nothing changes. It's all about how do you view what's going on. And then there is a secondary point to that. The secondary point to that is, to put as bluntly as possible, is the Constitution a living document or not? And so, that's where you start. And then you have your personal biases as to how to understand, and it just creates a whole bunch of nonsense. And so, again, it is what it is, right? Let me see here. Yeah, guys, listen. I don't even have the time to go in why is abortion an enumerated power of the feds. It just has to do with, law. It's case law, right? So that's what it is here in the U.S. It's all case law. So unless you have a unique, new, and novel way of looking at a specific ruling, a previous ruling, or a case that you're similar to, right? It's got to be different. If your case comes out the same way, it has the same things as a previous case that was already ruled, you're basically going to get that ruling, whatever it was. You have to present your case, with some new, novel kind of way of looking at it, something that differentiates you from a previous decision if you want a different decision. And so with with SCOTUS, it's even worse. SCOTUS is very slow to change anything. And one of the things we talked about in law school a lot was how they were they were a lot of older people, right? And they didn't really have a clue over the last 20 years prior to the 2000s, basically, about electronics. Beepers and cell phones and all this, which then goes all the way into the whole idea of being spied on and privacy and all this other stuff. And so, it's really the same kind of way with when you look at anything else they're talking about, abortion or otherwise. It's how do you view, first of all, how do you view the Constitution? Then what are your personal biases about things? Because that's going to change, how you view the question, how you view the answer, how you view the evidence. And it's just going to hold, it's just, we're people, guys. We're people. The same reason why different people have different views on the charts, right? So yeah. Trader XO, what's up, buddy? Good to see you, man. I see you're out there knocking it out of the park day in and day out. Always great to see. You going to be at Web3 Expo, man? Let me know. Let's hear. Blaze, what's up, man? Good to see you always. Let me see here. So yeah. Hank. Hank, you are so biased, man. It is so crazy how biased you are. Recently GOP installed, SCOTUS, sure. Prior to that, the Dems installed it. Prior to that, I mean, it's just, yeah. Whoever's in power is going to generally kind of more or less pick who's going in there, but that power always changes. And judges leave, and then new ones need to be appointed. So, I mean, it's kind of silly to say, oh, it's just GOP, blah, 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 when you're just looking at more recently, right? I mean, let's be honest. So, yeah. Oh, you're not Trader XO, man? Maybe next time, buddy. So, yeah, let me see here. So, Credit Suisse, let's get on here real quick. Credit Suisse, $3 billion to buy back its own debt in a move to call investors. If you guys have been watching, paying attention to FinTwit this week, you'll know that Credit Suisse was, everybody, my sources say on the verge of blah, 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 right? Of dying, right? Of collapsing, which would have been huge, right? But this $3 billion buyback, I mean, that basically says, hey, listen, guys, we're flush. You're fine. We're going to buy all this back, and you don't have to worry about it. We're liquid. We're not as illiquid as everybody made it sound, which is interesting because, certain things that were said by certain people in Credit Suisse, but this says, hey, listen, we're liquid enough. So shouldn't really be any more concern on that. This is interesting. That's not the best picture to use with this headline here, but you guys know that about 600 million Binance BNB crypto tokens stole, right? So I looked through that. Some guy was working through it. It looks like it was two requests that were sent through. Could have been a lot more. Thankfully, it wasn't. But So, that's a pretty big hit there. It's this whole bridge protocol stuff. We're losing lots and lots of money with that, right? So I don't know. How does that continue to work out here? But CZ here is talking about they were able to minimize the loss. Kind of crazy that the 600 million is minimizing the loss, right? He says vast majority of funds remain under control. And then he said they're looking at governance votes taken on what to do about the hacked funds and to set up a white hat program offering $1 million for each bug found in the BNB chain system, as well as whether or not to establish a bounty for catching hackers that would pay up to 10% of recovered funds. Man, talk about having people going after people. You see all these, you see all these 100 million, 400 million, 500 million. I mean, man, all of a sudden you got a chance to get 10% of that. Oh. I think that's a fantastic idea. I think if you want to catch people, that's how you do it. You offer more money, right? So anyway, yeah, we got all that going on there. Great times, right? Great time to be in crypto, isn't it always? Oh, yeah. No, I definitely agree about term limits. I'm a big proponent of term limits. If you look back into the people originally, there were two types of people, just like there are today, that were involved in, drafting the Constitution and whatnot. But I think, I think, they didn't really intend it to be something that people do as a living, right? They figured you're going to get regular people who are out there working, come in, do a little bit, and then go back, right? But if you take that out of it, then all of a sudden there's a lot less reason for people to get into politics, right? Because you don't have those outs, right? You don't leave that and then go on and make millions of dollars a year, working for some company that you worked to keep from getting stuff passed, right? Power is abused, age-old story. Yep. I actually did a lot of my my philosophy, political theory papers and whatnot on the theory of power and how it works. Yeah, for sure. Let me see here. Yeah, a large loss in BNB world. Yeah, so we'll see what happens here, right? TLRY says just sitting here waiting for Bitcoin and the DXY to swap sides in the hour early pivots. Yeah, so we were looking at this potentially being a triangle here, right? And I was looking at this as being maybe like a 1, 2, 3, 4. 1, 2, 3, 4 is a triangle, then a 5 on a break here. But I did tell our members that, listen, if we did lose this support here, it's likely that this is a flat. And so this morning, we did get it, but we got a lot further down. My target, as you can see here, is that pivot, which is that's right around the 61.8%, right around the pivot there. And so I kind of changed this to a leading diagonal. Now I've got 2 counts. We'll talk about the bear count here in a minute. I've had those 2 counts there. So if it's bullish, if this is still bullish off June, July, August, September, coming in October, right? Here in another 10 days or so, I think the 18th, it'll be 4 months, right, of sideways, right? This is all we're doing. We're 4 months, guys, listen, at the end of the day, we are 4 months of sideways. Locally, we're even, more basically a month, almost a month of sideways here, right? But, there's a lot of reason to think it could go lower. But that's exactly why there's the possibility you could see it higher, right? But what I think is whether you're looking lower or higher overall, for right now, we should still have, I think, maybe one more push higher. And here's why. So if we look at this here, again, this 1, 2, right? And then 1, 2. And then this becomes a 1, 2 of 3 here heading up, right? So if we look at this, we can see that the expansion of volume comes on the rallies. It's not coming on the declines, right? You get the declines, drops off, right? Rallies on the rallies, right? Decline, volume drops off. Volume picks up as we rally, right? So this is how you define trends, right? If it's an established, if it's a trend, you're going to get larger candle spreads, right? A lot less overlap, right? More advancement. or if it's going down, decline, right? But you're going to see volume expanding with it, right? If it is a pullback, what you're going to see is a lot of smaller candles, a lot of overlap, and you're going to see volume dropping off. So locally here, this price action volume seems to suggest that we're likely to get further upside. Now, that doesn't mean that this whole thing has to be bullish off the bottom, right? But it does look like we're doing this. So if this black count is correct and we get a rally off this 61.8 area here, which is this high volume node, right? Wave 2 finding wave 4 the lesser degree target. That's what we usually look for. That gives us a wave 3, minimum expected wave circle 3 target up here around 22,555.5 or so. It's this blue supply structure EQ area, okay? And so, you can see we're oversold here on the RSI and Stochh RSI on the 1 hour. 4 hour, we're just about to hit oversold here, so I think we might actually see it dip down a little bit further here into this 61.8 to 70.5, which kind of, again, just gets this other high volume node here as we get oversold with the 4 hour. And then we'll look for that rally up there. Again, that's the wave 3, okay? Now, here's the thing. The bearish count here says the same thing, right? Bearish count says, okay, well, listen, so if we're going to be bearish here, then this is, right now we're looking at this. I've got one other bearish count to talk about here too, okay? So there you go. If you're bearish, I got 2 for you. But this says, my initial one right here, at least while wave 2 holds as resistance, is that we've got an ending diagonal going on here, right? So the idea is this is a 3, this is a 4. We've got 5 still to go as an ending diagonal. And with that, we've got, ABC is 1, 2, ABC is 3, and then we have a W, X is a triangle, and then A, B, and C. And so if we get this reversal off this 4 hour pivot here where we're at, that means wave Y will equal wave W at this 21,541.5 kind of area. Okay? Now, sometimes, like I said, a lot of times, even though we use the 1-to-1 ratio as our initial target, many times, oh, you know what? No, I'm sorry. I'm off there a little bit. I'm sorry. 21,201. I was going from the bottom there. 1. Yeah. Okay. So this is a triangle, so we want to go off the end of the triangle. And that gives this target here, right? And so, again, we also look for wave C to equal wave A. And if we look at that, that's the 123.6. So that's what I was trying to get to here. Even though we usually look at the 1-to-1, often times we actually get the 123.6. If you're getting the 161.8, that should have you looking at the idea it's more likely a 1, 2, 3 rather than an ABC. If you're at 100% or 123.6, usually it's going to be an ABC. So, again, in either case, whether you're looking for it to, to ultimately head down lower or to get up, you're still looking at it as heading up here, at least while this wave X, let me see right here, right around 19,000 or so. As long as that holds. If we break down below that, then according to this count, we're done. And I guess, let me see here. That's 2479.43, 2445, 25,455. Well, you would have to get an ABC out of this that goes out just above wave W here. So my problems with that is, while valid, if you could get this ABC up here right above W, the fact that wave Y would end so very close to wave W, which should have you cautious. That isn't the way it works most of the time. And, again, when I trade, I don't look, I make sure that if I'm seeing something that's not what I normally would expect, what normally doesn't happen, then I'm cautious, right? Until it proves otherwise, right? So as long as that holds there, we should be looking for the rally up there, right? Now, my other issue with that, so this would have to become like this here, right? So let me get back over here. If I throw this channel on here, right? I've got a bit of an issue because if we're hitting this target, then we're breaking out of the channel. Now, the target makes sense, right? It's right here at this support level right here. So it makes sense. But I would be cautious, even if I think it's got to go down further. I would be cautious there because you did break out of this channel which has been in effect here for almost a month, right? Channel resistance. So you want to watch that. But nonetheless, you know, that's kind of where we would expect. It doesn't have to get up there. Obviously, you could stop short, do that, right? But we want to keep a look at this here. Keep a watch on that, right? Now, here's the thing. Let's say we continue to break out here and it goes above this wave 2 up here at 22,800. Does that mean that price is automatically bullish off the June low? No. Now, it adds confidence to that because if you'll remember, this is wave B, right? So if this black count's correct, 1, 2, right, over here, where is it? Over here, I'm sorry. Then breaking out above wave B adds confidence to that, right? But the other possibility then is that maybe this is what I've been talking about, is that maybe this is just one large wave 4 triangle. So A, B, you get C, you get D, you get E, and then it'll break down, okay? Now here's my thing. In either case, I think there's a strong case to be made for rather, everybody wants 12,000, 10,000, whatever, right? Everybody's got these really low numbers, which you could do. But most often, when the entire market is getting big guys, little guys, everybody's getting to that point, most often they get caught, right? Either it doesn't break down, and so then they keep holding hope it will, right, as it continues to rally, and then it gets up and breaks out, and they're like, well, now I'm scared to go long because now we've broken out, now it's got to pull back, right? Or it dips just below and traps everybody that was waiting to short that breakdown, right? So, you know, if you're looking at this as 1, 2, 3, 4, and 5, well, I think you just get a dip below, maybe 16.5 or something, right? And right back up. Drops down, rallies right back up, closes back above that June swing low. In terms of this right here, this Wyckoff range right here, right? In terms of that, all of a sudden it starts, you know, that just becomes a spring, right? And so again, we look at volume and price action. And what do we see here? So we don't see any significant selling at the top, right? Which is odd. You should see, especially in the beginning of a range, you should see a lot of selling up at the top, right? And so we come down to the bottom, right? And you see your volume actually drops off at the top there until it hits the support level here. Then it spikes up, but then it drops down the rest of the way, right? So there is no expansion of volume coming off the top here, really, right? I mean, you basically have volume equal, yeah, I mean, a little bit higher, a little bit lower all along this way, but, you know, around these spikes, right? And you have that one spike as it hits that support area and then breaks down, right? But look, there's no, what we're looking at, there's no follow through. So when you're looking for distribution, what you're looking for is a lot of large candle spreads and expansion of volume. You want to see that the market's continuing to push that down, right? And that's what you look for there. And we don't really see that here. Now, if we look here, we do have a bit of a, not even really that, we've got a decline here as we're going up. So nothing really there, though we do have that nice candle there. But then we have a nice candle here. Comes back down. But again, on the way down, volume drops off, right? So we're not seeing any type of real trend here, right? Other than, I don't know, if you start here off that initial bounce because you had that big drop, right? Initial bounce. Then you've got volume picking up as we go through here. But then it just kind of drops and it just kind of drops off as we get up there. And so there's really no trend going on here, okay? So I'm looking for a trend to develop. I'm not seeing it yet. But what I do see is if we look at volume in this area versus volume in this area, what you see is the spikes, there's a lot more volume picking up higher up here than there was here. So what does that say? Well, we've got comparatively volume picking up in this area as we're finding support, right? Potentially building a base. Now, in terms of if you don't like Elliott wave or you don't like all that other stuff or Wyckoff or whatever, possible double bottom forming here. Adam and Eve, right? So your Adam head is sharp, right? Your Eve head is more rounded. And we're pretty close. You usually want it within, 5 to 10% of the low. Whether it breaks down lower or stops a little high there, you want it within about 5 to 10% of that low. And so we've got it. We've got a sharp rally here, and we've got an extended kind of rounded rally here. So, you know, could potentially be double bottom here heading up. But there is nothing going on in this price action volume here that says, oh yeah, there's some trend that's formed from the tops that says we're going down lower, right? What we do see is a lot of back and forth in critical areas between, you know, supply and demand. And so this gets interesting. So we have to watch. Do we get follow through? Again, if we're looking for follow through, first thing's going to be a breakout above this swing high here. Second is this swing high here, and then this one up here. If you want to be bullish, that's all you need to watch are those three. If you get through this one, this is your target. If you can get through that one, there's your target. If you get through that one, now if you get through that one, then that potential wave 4 triangle is no longer valid because you have A and B, and C cannot break out above wave A in a symmetrical triangle. So if we're looking at there, again, you know, I think now is not the time to invest. I think now is basically the time to be a trader, and you're trading more the short term. You know, going up or going down short term, and then you work into that. I think if you're trying to be an investor and buying, I think your better chances were down here and over in here. I mean, you could still get here, but you're starting to get off that. And, you know, it's getting questionable. It's here in this kind of sideways stuff. And so I think you're just taking on, you know, quite a bit more risk to get in there. But again, you know, if you're looking to add to it, I think your stop loss goes right here because it may not do. It may not just dip down like I'm thinking if it does break down, right? We could go maybe 14, 12, 10, right? Something lower. So if you're trading or if you're setting up for a long term, right, I think you put your stop loss right below the swing low here. And if it just dips down and zips back up and closes back above that swing low, well, you know what? You're knocked out, but now it's time to get in long again because now you've got a semi-confirmation there that bottom's there and we're headed up. But if it does go down to 14, 12, 10, whatever, well, guess what? You save yourself with that. And I think, you know, most traders have real tough time to it because your thought process is exactly, well, what if it just dips down and comes back up? Then I'm going to get knocked down and lose money for nothing. But you rarely, and you give that more space in your mind. You let that rent out more space in your mind than the idea that what would be more, you know, what's a very good likelihood is that it goes lower and lower and lower, right? Or even if it's not as great a likelihood in your head, the fact that it could do that, right? It is it really is quite possible that it could. And if it does that, then you're holding on to this bag up here and it goes down to 10,000 or something where, you know, you'd basically be 10% in, right? Or 50%, you'd be able to get in 50% less, right? And then people try to rationalize and go, well, you know what, though? I'm going to hold it for 10 years. And so even if it did that, I'd still probably be up. But, you know, I don't think that's the best way to think about trading or even investing. I think you want it when you can. You want to buy those bottoms where you can, but not with the idea that you hold on if you buy in and it just keeps sinking 50% or, you know, whatever. You know, it drops halfway lower, right? So, yeah. Let me kind of catch up with you guys. Let me see here. Let me see here. Looks like y'all are still talking. Oh, wait, let me see here. Okay, you guys are still talking about politics there. Didn't mean to get you all down on that. Common Man says, if Bitcoin breaks down below 19,000 relative to the weekly chart, it will likely dip pretty hard. Buy 14K, just my 2 cents. Yeah, I mean, if it gets down to 14K, yeah, I think you definitely, that's, you know, where you start looking, sure. Let me see here. Let's go to the weekly here. Yeah, so I mean, you know, where it's being held up, you know, a lot of people go and they go, well, why is it holding up here? Well, because this is why. Right? This supply turned demand, which was then confirmed, you know, you had it here, which was then confirmed here, is where we've hit here, right? Again, potential Adam, Eve, double bottom. And I say potential. It's not guaranteed. But here's something else we look at. If we look at this here, right? So you can see that we've got this drop off here on the weekly here, right? Over these 3 candles, the last 3 weeks prior to this one. Look at the volume. 3 weeks out, you had this big supply definitely in control, bearish engulfing type candle, right? 2 weeks ago, you've got quite a bit more volume, and your candle spread went from $2,414 to $609. That's 25%. So you did significantly more work than the week before, and you only got 25% of what you got the week before. Then you go to the next week here, and it's even more volume, and we flipped now. Now we've closed higher than we opened. It's not even supply and control. We flipped higher than we opened, right? So if we're looking at that, yeah. I mean, heck, you can even come off over here, off the top here. But what you see is an expansion of volume and a significant decrease in candle spread. Usually denotes a bottom, for a bounce at least, if not a reversal. Okay? Now, I like to see this type of candle like actually at the bottom, but I'm going to give it some deference here. Often when you see this kind of candle right here, or this kind of candle right here, this looks like a reversal hammer, coming at the bottom of a decline, that usually indicates a reversal. Like I said, I usually like to see it there at the bottom. So see, you had this decline here 3 weeks in, and then even though it dipped further, it rallied back up, right? Then we come down here, we got this. And so basically what it does is it clears the way, and then you try to head back up, right? This week looks like it's trying to clear the way as well. Notice they're both just finding resistance right here, where you would expect that support area, right? Support resistance area. So it makes sense. Again, yes, we're kind of high here with Stochk RSI, but RSI we're low. All this going on here is the same thing as I've shown you guys that happened in 2018 bear market low, 2015 bear market low, right? So all that's kind of looking the same there. As a matter of fact, let me pull up that chart here real quick. Let's see, where is my chart? Is that it? All right, so this is one right here. And of course, there's those lows I was talking about. Again, the only time, if you guys haven't seen this before, as I've been pointing out for weeks and weeks and weeks now, the only time that the weekly RSI has ever dipped and oversold was right here, back in June, here in December of 18, and here in January of 2015. And like I said, the Stochk RSI, everything else kind of lays up with that, right? Everything kind of aligns. We rallied back up, went sideways, and then went up, right? Whoops. Over here, rallied back up, went sideways, and then broke out, right? Over here, rallied back up, overall going sideways. Do we follow through? I've marked off so much on here. We've got the hash ribbons here. They're the same at each time. Just looking for that blue buy signal now, right? Let me see here. We've got, geez, I don't even know. So this is the time into the next halving here. And if we look at the amount of time that is, a little bit larger here. So kind of went into 64, then 71. And so even if we make it larger here to 78, right? And halving is expected to be around March of 2024. I mean, with all these, it kind of aligns, right, with where you get those lows, right? You got the low, you rallied up, you pulled back, kind of did more sideways and went up, right? You got the low, you rallied up, you pulled back, you went sideways, went up, right? You got the low, you rallied up, you pulled back, do we go sideways? Again, this purple line right here is the 300 MA. You can see that got the support there on, that was that 2020 March drop there. The Phoenix thing. No, not Phoenix. I'm sorry, BitMEX thing. BitMEX engine, liquidation engine issue there. And so here we are on that again. We're kind of between that and just above the right here, the orange one, which is that 200 MA, right? So, I mean, what you're looking at is a lot on there. The other thing is, if you look at the Awesome Oscillator, what you see, it looks like we've got twin bullish peaks here. And what that means is you've got a big peak underneath that 0 line, and then it rallies up, and then you create a smaller peak. And usually that indicates that you're going to have a reversal, and you're going to see this kind of rally up to the top side there, which means, you know, of course, price should then break out and head up higher here. You've got the death cross here on the, let me see here, what is this? This is the 50 in green, 50 MA. That's the 100 MA in blue. You get that death cross, which happens after the low. And it happens just generally before price breaks out above the resistance and heads up. You had that right here. And so in this case, it kind of extended a bit longer here. And I would say actually that this is a lot more like this than it is like this, right? So maybe we get, you know, a little bit more expansion there, but nonetheless, same idea happening, right? So you're, as usual, your death cross is going to be, you know, your death and your golden crosses are lagging indicators, right? Because you're using moving averages, which are lagging indicators. Usually when it's happened, when a death cross has happened, a bottom has been established, or a golden cross happens, usually a top has been established. The only thing that changes that is when price is right around that cross when it's happening. Okay? Don't ever forget that, guys. If you look at golden crosses and death crosses, if price is right around where they're crossing, then it's more likely to, you know, if it's death cross, the price will go down further. Or if it's a golden cross, the price will go up further. But when it's removed from the price action, in this case, you're getting the death cross well above where that low is here, right? It's late. Usually the bottom is established and you head back up. So again, same thing happening there. So, you know, a lot of things here to suggest that maybe it could go up. Nothing here guarantees it. Not at all, guys. But, you know, if we get a good reclaim of this 200 MA here, if you use MAs, really I'm looking at this 25,198 level. That's on the BLX here. Basically this swing high here. If we can pop out impulsively and close above that, I think for all intents and purposes, the bottom's probably in. Until then, we're just going sideways. Showed you a lot of different ways to look at it, suggest that maybe, you know, the bottom may be in, but nothing's guaranteed yet. We have to get through those levels. So, yeah, we'll see how that kind of turns out there, right? Gonna get in here real quick. All right, like I said, we may see this coming down toward that 61.8 to 70.5 level here, which gets us this other high volume node here, right around 19,100 or so. We could see that continuing in. Right now, I mean, it looks like if you zoom in, it's ABC is 1, 2, ABC is 3, 4, and then ABC is 5. So that's what I'm kind of looking at. I mean, it is possible maybe this is 1, 2, 3, 4, 5. But either way, looks like, you know, we're finishing up that move on the way down there. You know, wouldn't be surprised at all for the 4-hour RSI to dip into oversold before we do that. But right now, you will notice that right now we are looking at some potential hidden bullish divergence here, right, on the 4-hour. We've got higher lows. We've got lower lows here. So we'll see what happens, right? Gosh, let me get up here. Edward, what's up, man? He says, we had the 3-day death cross of the 5,200 sometime in May, and not too long after we dropped to 17.6. Yeah, and so once again, you know, it depends on which ones you're looking at, right? We're talking about the 5,100 here. You're talking about a larger spread, 5,200, right? And you're talking about on the 3-day, not the weekly, right? So yeah, I mean, if you look here at the, let me get back here on the 3-day. And then we'll look at some other charts here. So 3-day, and you said what, the 50 and the 200? Okay, so you're looking at the, let's get rid of some of these here. You're talking about this one right here, right? Oh, you said in May. In May. Were you mistaken? That was good to see you, Edward. This is the 3-day chart here. The purple one, oh, I'm sorry. Nope, purple one's 300. There we go. Nobody caught that, huh? Nope, Bollinger Bands. Where's my 200? There we go. All right, all right. So you're looking back. Let me see here. You said May. Is that it right there? Okay, yeah, there's May. Yeah. Oh, perfect example. Look, this is exactly what I'm talking about. You see how the price action is right here at the cross? This is exactly what I'm talking about. Thank you for bringing that up, man. Yeah. So when you see a death cross on price action like this right here at it, then you can usually expect it to work out lower. Or if it was to be a golden cross, you look for it to go higher, right? Yeah, this is exactly what I was talking about right here. Price action at the area of the cross. Let me see here. Again, right here. You see it right here? Now that's interesting. Okay. So back here at the coming into that December 18 low, the sideways, we had the cross, and that dropped us down, right? We have the sideways, we have the cross that drops us down, right? Man, you may have stumbled onto something here. Of course, we've got the blue buy signal here on the 3-day, but as far as the 50 and the 200 go, man, look for a cross, a price to cross above the 50 here, the 50 MA. I think if it does that, we might see, again, the indication that bottom's in there. A lot of similarity here. So that was a great one, right? Let me see here. Oh, big fake. No, I didn't care. I didn't cover those just yet, man. Sorry, we got in a big conversation about Bitcoin. So, yeah. But anyway, but this is what I'm talking about, guys. What I was talking about earlier. When you have price around the area of the cross, then you get the expectation. If it's a death cross, you should expect things to drop. If it's a golden cross, you should expect things to rally, okay? When it comes away from the price action, it usually means it's already happened. So you got a golden cross here. Price action is way up here. The high already hit. You see? Right there. So yeah, man, that is fantastic. Glad you brought that up. Now I can post that on the interwebs now, right? All right, guys, let's jump over here real quick. Let's see what we're looking on here with the dollar, okay? Yeah, so we had the death cross already there on the 3-day with as you saw there where we were. So it's a fantastic find there. So yeah, I think that was a great find. I appreciate that, man. All right, so I have adjusted the count here on the DXY, the Dixie. There's still no guarantee that this top is in yet. It is possible. I was looking at this as a 1-2-1-2, but we broke out above, so it's not. So as I told you, it's possible this is going to be, an ABC or a WXY. But, we need a breakout above the swing high to kind of really confirm that. Until then, it is possible that we've got a leading diagonal here, and then we've got a WXY potentially printing here, right? So you can see that we rallied up and got taken out there at the the hourly pivot here, right around the 61.8. If we continue to rally, we can look up here around the 78.6, which gets us right into this the supply structure up in the wick here, right around 113.74. If we're breaking down, whether it goes up there first or does from where we are here, if we're breaking down below 110.779, that's going to add confidence to this count, the idea that we've got a 1 and a 2, and then we'll look for lower on that. But we'll just see what happens here. Again, if we break up through the top that says this is 3, this is 4, and we've still got 5 up there toward 117.77 or so. So, would be expected target based on the fact this was a wave 4 height. If it is, again, if it is. It's always, possible that this is a 1-2 rather than 5. I think that'd probably be the way. Instead of being 3-4, I think this would probably be like a 1-2. And in that case, I think, there would still be the possibility that we could head up there toward 120, right up here at the top of the supply structure, 120.788. So I'm going to go ahead and pop that in there as well. But then that should be wave 5 done if that's the case. So, and what would this mean? You know, I think if we got something like, if we're breaking out above the swing high here, I think there's a good chance that Bitcoin does break down. If we're only getting a little bit further up, I think we just maybe get a dip and back up. But if we're getting up here toward 120, I think Bitcoin maybe makes that move down toward 14,000 or something. Yeah. But in that case, you know, again, I think it's just a 1-2, quite possibly, off that December 18 swing low. I think that ups the odds that is. I don't necessarily think, at the moment, I don't necessarily think that 5 waves are in. Again, it has to do with the fact that, you know, there should be more exuberance coming out at the end. And then again, it's the same reason for the whole, you know, when I'm looking at the stock markets there, you know, the possibility of why it may continue up higher. But yeah, so, you know, we'll see how this plays out here. As you can see, 4 hour, we are overbought. Let me see here. Daily. See, the daily, though, we're bouncing out of oversold here. And this is my one if about, if we put the daily, this looks like an ABC. And then we've got this almost a bullish engulfing. It actually opened a bit higher than where it closed, but same idea. Large candle breaks out above the pivot, the daily pivot. So these 3 things really give me pause and make me cautious and have me thinking we could definitely see it rallying up higher. But again, if we can get that breakdown below, well, then we should be good to go, right? But we got to get that. And then, of course, you know, again, Stoke RSI be 90. But, you know, RSI itself, we're just kind of finding support on the previous area of resistance, support here all along the way, right? So if we can break down below that on the RSI, I think that signals maybe that we'll head down lower then for sure. I say for sure. It for sure signals that we may head down lower. There we go. That's what I'm trying to say. Okay? So, yeah, but I'm definitely watching, you know, the dollar and what's going on there. You know, watching bonds, stuff like that. Actually, let me see something here, guys. You know what? Let me pull up. We track TLT. I just updated this yesterday, but that was before all this thing happened today. I'm looking at, you know, quite potentially having 5 waves down here. I don't have it on here. Where's my 5th? Here it is. You know, maybe 1, 2, 3, 4, and a 5 at that S1 pivot. Right here on the daily, if we don't get a rally off the 4 hour S1 pivot there. So right now I'm looking for a breakout above this wave circle 4 swing high up here at 104.86. If we get that, then I think we rally higher there. Again, potential double bottom here at here. Wouldn't be a double bottom down here, but, you know, again, could be down. Right here looks like 1, 2, 3, 4, 5. So it's looking pretty interesting at the moment as far as TLT goes. Let's see here. Changing your band name to 3-Day Death Cross. Let me see here. So yeah, TLT looking interesting at the moment. Let me see here. What else we got? We got indexes, right? So if we look at the NASDAQ Composite, all right, now we've hit the EQ here. We've just about hit oversold. It does appear to be in 3 waves so far still. It does look like we have 5 waves up, 3 waves back. So, you know, I'm sensing this is going to continue pushing down through the end of the day. I don't know. Maybe it could push up at the end of the day, but I think, you know, 1 hour anyway. Man, look at that. So on the 4 hour, we've got a an island reversal here. What you have is you have the gaps up here and then gaps back down, but that gap is over the gap right here. So even though you have this wick in here, you have this space where it gaps on both sides. That makes this a island reversal. So kind of like this up here, island reversal up here. Didn't have it here because it continued up, but then you had the gap here and here, right? So yeah, potential island reversal there you know, your daily doesn't scream like strong big move down. I could see it coming down further though, but you know the RSI is really still quite low. Stochc RSI is crossing, but again, you know, you can have a lot of sideways with that. That 1 hour though, that 1 hour is about to hit oversold on that. Does it look like closer there? I don't know. You can use the 65-minute chart if you're interested on the if you're trading stocks, because that's like, you know, that makes all your candles equal for the trading day, right? And so, yeah, I mean, you know, again, 1, 2, 1, 2, 3, 4, 5 gives us 3, 4, 5, A, B, C. So yeah, I would look for, I mean, you can see that you've got this 30-minute wick here. So you've got demand down in that. So you might just get a deep 2 and then I wouldn't be surprised, I guess what I'm trying to say is see a strong rally up and out of here. I'm not saying that's what's going to happen, but I could definitely see the way this is lining up now for that potentially to happen. And in which case then, you know, wave 3 is going to change the target here. Say we get down to the 90 there, right there into that wick there. You're looking for right up here at around 1707 and 15, that kind of area. If we can get that reversal. But you know, as always, guys, when it gets really close to that swing low, or if you're going the other way to the swing high, you usually kind of, you know, err toward the side of caution, which is it continues to break through or break down or break out. But if it does rally, I would expect to see a stronger bit of rally coming off that, doing that there. Let me see here. Weed stock reminder. Oh, and another question. I appreciate you, man. If you could only talk to one of these guys for 2 hours, who would it be? Warren Buffett or Burton Malky? That's a good question. Let me get back to you on that. Let me get back to you on that. Let me pull up a chart here for you guys. All right. Let me see here. I don't have the stuff on this chart. Is the Dow Jones there? Oh, by the way, just a real quick look here. This is the yearly candles for the Dow. So unless something happens over the next few months, which it could, this is looking quite bearish. But remember, bearish engulfing usually needs follow through. Bearish engulfing is not not definitively a reversal. It's a pause. But if you get follow through after it, then it becomes a reversal, right? So yeah. I mean, like you had this right here, right? And then it went back up to the, so you know, you can see this down here into the year, and then next year maybe rally back up here. What if we did that? What if we ended the year like, you know, I don't know, 28.5, 28, something like that. And then next year, all we did was rally up back up here to the all-time high kind of area like this here. And then the next year, drop back down. And the next year broke out just barely higher. And then that'd be kind of crazy, right? But yeah, good times, right? But anyway, so that's where we are with that anyway, with the Dow. Let me see here. Let me pull up silver for a minute, and then we'll jump into that. All right, silver, still looking at wave 3 up here at around 22.125. We've got a 3-wave pullback on this rally. Not sure that wave 4 is done yet, but if we can break out, actually, we don't actually have to get to 29.30. We just need to get here to 28.75. Not a lot of difference, but if we can break out above that from where we're at without printing, you know, up and down, so 5 waves down just from 3 waves, then that would say, okay, wave 3 in progress up there toward 21.125. Let's see here. You said TLRY, right? All right, I haven't looked at this in a while. let's see here. TLRY. Look at that. Whoop, and sold. And where'd they sell? Right here. Look at this, guys. I mean, we can get up to where they really, where they overextended to there, but I mean, really, look at that. That's where they sold. Makes a lot of sense, right? Let me zoom in a bit more here. Yeah, there's that pullback. Yeah, I mean, it looks like it could be an ABC is 1, 2, ABC is 3, 4, and then A, B, 1, 2, 3, 4, 5 maybe. See, maybe just some large leading diagonal. Big thrust out. So that's at what do we call here? Sorry, I'm trying to do this while I'm thinking. It's not working. Throw over. So you get this strong throw over, and then you get a strong drop back down. I think that could be one up there. Or even, let me see here. I think it's even possible maybe 1, 2, 3, 4, 1, 2, 3, 4, 5. So this gives us 1, 2. Let me go ahead and label this real quick. Some other thought here as I zoom in a bit. 2. And then we've got no, it's got to be smaller there. Well, I mean, one there, and we can go 1, 2. See, that's not going to be smaller though. Let me just make sure where these wave 3s would be, depending on how we're looking at this. Yeah, see, that can't be a wave. This can't be like a 1, 2, 3, 4, 5, because wave 3 would be the shortest of 1, 3, and 5. But it's possible we got an ABC with a W, X, A, B, C as a Y. And then we'd have A, B, C as a W, X. Let me see here. Yeah, X, and then actually, I think this would be, okay, let me see here. So maybe we have something like this, W, X, Y for wave 1 right here. And then we have, it looks like 1, 2, 3, 4, 5. So maybe we've got some sort of ABC going on here. Which is, still 3-wave done there, right? And then in this case, this would probably be something like A, B, C, D, A, B, C, D, E maybe. Or, we can just do it right there. We'll just do it right there. We'll say, okay, well, there's a triangle there for that one. Right here for wave B of wave 3. So wave 3, big volume, big candles, right? Wave 3 here. I think this might actually be quite possible. So look like something like this. Maybe. Whoops. Unless that's an ABC. Wave C's often have a lot of volume in them. The capitulation waves, right? or in this case, they're the FOMO wave, right? So then you get this 1, 2, 3, 4, 5 up here, right? So 1, 2, 3, 4, 1, 2, 3, 4, 5 is A, triangle for B there, and then 1, 2, 3, 4, 5 for C. In which case, then we have an ABC, it looks like, done, or just about so. A, B, potentially C done. But we haven't broken down in here. So that makes it iffy. I think we might have further to go. We might be looking down toward this area to get wave 4 done. Because, leading diagonal, you want wave 4 to break down into wave 1. So it's got to kind of get down toward that area. And there is room here on the 30-minute for it to fall further. 65-minute, we've got room, yeah. This could be like 1, 2, 3, 4, 5, maybe like an ending diagonal here. What's that 4? Yeah, that 4's got room for it still to go. Yeah, that 15-minute is still just there. I don't know about any diagonal here. This is 2, 3, 4, 5, maybe. Let me make sure. Yeah, it looks like that could do it. So we might get a bit of a bump here, maybe toward 330, maybe even as high here as 340, 345 area. But then I think we go down further. But if this is good, oh, you know what? Maybe we've got the ending diagonal going on here already. Like an ABC is 1, 2. A, B, C is 3, which means you're going to want 4. Oh, yeah, 4's just got to come over. We've pretty much done that. Okay. Let me write this out here for you real quick. 1, 2, 3, 4, 5. Potential. When there's a lot of movement like this, though, things are kind of sketchy. But, yeah, there's your ABC up there potentially. The only thing is, it looks like wave 3 here is going to be shorter than wave 1, which means wave 5 has to be shorter than wave 3. So yeah, this is possible as long as we don't break out above this wave 4 here, which means wave 5 is actually going to have to end prior to that 1306 area. Because if it breaks down through that, then it makes wave 3 here the shortest. We can't have that, right? And that's pretty close to wave 1. Doesn't quite break into it. Wave 1's right here around 4 cents lower, but it's pretty close. It's close enough. So yeah, I think if this count is to hold out, we're looking for a breakdown here below this swing low, which is 318. And then wave 5 has to turn up, no lower than 307. It can't go to 306 or... Well, it can go 306. It'll be equal to wave 3. It just can't go 305 or whatever. And then just a few cents lower, there's actually wave 1. So it doesn't end up being any overlap, but I think that's possible. So if we can get this and this reversal around 307 or so, and then a breakout above this 326 here, that'll be the first clue that wave 4 is probably done. We want to break out here above wave B at 366 to signal that wave 5 is in progress. Let's just do it from the low here. I could see 487 for wave 5. Where's that going to take it? Oh yeah, look at where it takes it. Right here, the previous area of support resistance, kind of right in this high volume node here. See, I had this drop and then support, dropped a little bit lower, then back up, and then support same area, back up, broke down, rallied right into that same area, got rejected right prior to it. I mean, so yeah, that's a good potential target on that. So we'll see if we can get that other stuff happening to make that happen. You can see right here at the end, we've got 1, 2, 3, 4, 5 here. So we got 5 waves down. The weekly. Look at how that's all fallen. I remember we used to be trading this stuff on the over in this area, and then again in this area. You can also see that we found support right here in this demand structure on the weekly in this lower wick. Weekly candle. It's not a great looking weekly candle, but again, remember what I told you about this specific candle right here at the bottom of the trend? Again, pretty much there. The week before was just a tad bit lower, and then we got this. And we got that on just a slightly less volume than what we had here. So, you know, comparatively, a lot more effort and no result at all. Matter of fact, it all went the other way between these two candles here. I mean, yeah, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. Yeah, so I mean 1, 2. Yeah, so 1, 2, 3, 4, 5. Potentially, yeah. I mean it looks like it wants to say there's quite potentially a bottom there. We've got bullish divergence here on the weekly. And we had it previously, and then it dipped down lower. Now we've got it again. But we've also got, you know, a bounce out of oversold here on the weekly Stochastic RSI, and we're trying to cross bullishly. So as long as we don't tank here by the end of the day, we should cross bullishly today. Yeah, I think it's looking pretty pretty possible there, for sure. Yeah. So, let me see here. Yeah, I think that's actually not looking too bad at all, honestly. And you could potentially go 1, 2, 1, 2, 3, 4. Well, this would have to be an ABC, right? So AB, 1, 2, 3, 4. Man, that doesn't look like such a great... Right here, this would have to be a flat. I think this would have to be a 1, and then A, B, C, but that's such a huge move there. I'm really hesitant to call that some kind of flat. I think we just see if we can get that rally up there locally. I think there's a case to be made for potentially to be there. And then this looks again like an Adam and an Eve. This might take weeks to kind of, or months here to move through, right, to get back up to this level, $7, $8 level. And so we get like a sharp head here for A, rounded head, rounded bottom for Eve. So Adam and Eve, then go up. Yeah. So I think there's a possibility that would work. You know what? I think I'd want to talk to Warren Buffett. Looking back at your question there. If I had to choose between them, you know, whether you like him or not, and a lot of crypto folks don't because of what he said, him and Unger there about crypto. But the fact is, he's got a lot of knowledge. He's got a lot of experience. So much more than I do. And it doesn't, you know, to speak with them doesn't mean that you have to worship the person or, you know, agree with everything they say. It's about understanding them and how do they view the market? What have they learned over the years? Because I can guarantee you, even if what they're doing, which has worked for them for, you know, 60 years, doesn't work as well today, even if that were the case, if you're talking to them, if you're doing it correctly, you should be able to pick up a ton of knowledge and ways of looking at things that are going to be significantly helpful to you. So yeah, I think it's who. But anyway, yeah, so there we go. Looks like we're trying to get a pretty good rally right here off the pivot. So again, look for a breakout here above, well, you can say the daily pivot, or right below it there is 20,065 and 26 cents. If we can get that, that's going to suggest that wave 2 is probably complete. Breaking out above wave B here at 2261.04 should add confidence to the count. And again, if the black count's correct, that gives us a wave 3 target up there at 22,555.5. However, so, we're looking at those same breakout areas, right? But if you're zooming in sooner, again, you can look here as well. You can, instead of waiting until it gets way up there, you can get a sooner entry in here at about 19,709, breaking out above that. I think it'll be a good. It'll be the first hint that the bottom's in. This is a better clue up here, but what you need to get, of course, is this wave B area up here to add confidence. Because if this is a flat, then you have to break out above wave B to confirm the flat is complete, right? But yeah, that 1 hour looks ready to kind of move a bit. So I mean, it should be a decent, easy trade to make some money here anyway. Like I said, wave Y will equal wave X here right around 21,201. And at that point, from where we're at here, wave C will be 123.6 of wave A. So in either case, guys, you don't have to know whether it's going down or up here. All you have to know is, okay, listen, we're going up here. Here's our first target. 21, did I move that? No, okay. The 21,201 area. If we continue up going through there, we'll look at 22,555.5, and at that point, we'll start leaning this way. If we get that target, if that's all we get on that target there, then wave 4. See, this is such a great target because wave 4 would pull back to the channel resistance as support. 38.2 at 21,216, 21,270, or 50% at 28.80. So that's what I would look for. If we can get this move up here, the thoughts are it's probably a wave 3 there. So we'd look for that pullback basically to the channel resistance as support. And then we get the break out of there, and all of a sudden we're looking at 23,500, 23,745. And in either case, that takes us above wave B here. And so taking us above, above this area here. Of course, get this way up here. Take us above that, takes us above the wave 2 here, and that invalidates this bearish ending diagonal. But it then moves the alternate bearish count, the triangle, the fourth wave triangle, into primary for the bearish count. But again, if we keep on seeing it breaking out above the swing up here, then those bearish counts are both out, and it looks bullish up through 30, 31, 32, around that area at least. So yeah, we'll see what happens here, right? You guys excited? You guys ho-hum? I'm on here a bit longer. What about Ethereum? What about it? I haven't looked at the chart since yesterday. Yeah, I mean, Ethereum, man, we're just... So if I'm looking locally here, I've got this as maybe a 1-2, 1-2 as a flat. The other possibility here is ABC is 1-2, ABC is 3-4, ABC is 5. It gets us a wave 5 right around this wave 1 here. So 1-2 and then 1-2, and we should just pull back right to this kind of area where we're at here, right around this 1330 or so, this high volume node, as a 1-2 there, and pop us out with a 3. Yeah, I don't think this is a 1-2, 1-2, 1-2. I don't think. But if we're looking at volume here, I mean, again, very, not a whole lot of volume coming at the top. It comes in right here. And then again, tries to push down at the low, but look what happens. It doesn't push down lower, right? The low is still here. Look at how much volume it is compared to over here. Look at the candle spread difference. You have $79 of negative candle spread in there. And then you get over here, off the bottom here, and you have $9.17 of positive spread on, I mean, nearly the same volume. So comparatively, a lot more effort, a lot less result in this candle over here. Rally up, we come back, we print another higher low. Going up here. Right now, we're printing another higher low. But yeah, there's nothing. You had the attempt here, this higher volume. Look at this volume right here is higher than this volume over here, right on the low. On the attempt to break out through here, gets rejected that previous area of resistance, right? Okay, boom, price down, drops down, but again, prints a higher low. There's no follow through. We're not seeing any follow through yet. So yeah, you see a lot of supply coming in here on this one, which leads to a pullback, but you're not getting follow through. So remember, when you're doing it, it's not just price action and volume, it's price action and volume, and then you need to see follow through. In this case, we're not getting that yet. As a matter of fact, we broke out higher. So, you know, I think you lean to the side of bullishness at the moment, and you see if maybe we can get this as ABC is 1, 2, ABC is 3, 4. And let's see here. Wave 3 here is... it's larger than wave 1. So generally, you know, we would expect wave 5 to be larger than wave 3. You know, we'll probably come on down. I don't know, we might come down further here. But we should look for a breakout above 1432. At 1432 off the pivot, that would make that 1, 2, 3, 4. Wave 5, the same height as wave 3. You know, the 123.6 kind of hits this this right here, which is the 200 MA on the 4-hour. This is the 50 MA. Again, death cross right around the price action, right? Go down. Death cross right around the price action, it goes down. I'll tell you what, guys, there's your price of admission right there. If you've got that down and you find death crosses on price action, you can all but be assured the price is going down pretty good. If you find golden crosses the same way right on that price action area, you can expect the price will rally pretty good. But right now, the 200's starting to flatten out. The 50's flatten out, starting to curve up. Yeah. So I think we might actually... See how quick this moves up. Yeah, no, I think if we see this move up and then move back and then break out, and then you'll see 50 pulling up with it. And I think on the big breakout, so you know, you get a 1, 2, and that wave, that third wave breakout, wave 3 of wave 3. I think you'll see it. You'll probably see that bullish cross of that 50 and the 200 on the 4-hour. The MA's crossing bullishly. Similarly, you know, right around the area of price action. I think it's probably what you'll see there. But yeah. So yeah, there we go, guys. I need to get out of here. I'm like really over. You know, I don't know that I'll be doing a live stream next Tuesday. I'll be there in Vegas. I'll try and let you guys know there on Twitter if I am or not. I got to think. I've got panels and stuff to be a part of. But yeah, I'll let you guys know if I am. But I'll be back late Thursday night, almost Friday morning. So we should have a Friday live stream regardless. As always, guys, you know, hopefully you learned something. You know, again, I'm not here to tell you that you need to agree with me or anything. You can see that Hank usually doesn't. But you know, again, the idea is just that you get an understanding of how I look at the charts and why I see the things the way they do. And, you know, and then you get an understanding that I don't ever, you know, guarantee anything. You know, it's stupid. There are no guarantees. I don't control the price action. But, you know, I give you areas of validation and invalidation, right? And so if it goes through an area of validation, then it's likely the account's correct, and here's your target. If it goes through invalidation, then likely incorrect, and there's your target. And, you know, I think if you're trading that way, guys, it just makes life a whole lot simpler. Just make sure you're using proper risk management, right? Don't throw everything you have at every trade. Don't ever throw everything you have at any trade. You know, it's all about that risk management, okay? Size appropriately. Man, oh man. All right, guys. I hope you guys have an amazing weekend. I don't plan on gambling. I don't gamble. This always throws people off, right? I think they think that that trading is gambling. It's not. But I don't gamble. So I don't plan on spending money with the slots or craps or blackjack or anything like that. Just keep busy out there. Hope you guys have a great weekend. Y'all trade safe. And, and as always, remember, the only thing you control in the market is how much you lose. That's it, guys. If you coming in here, week after week, show after show, and you still haven't got that down in your head and why, man, I don't know what to tell you. If there's one bit of advice I can give every trader out there, especially new traders, proper risk management. You will not be in this game for very long if you don't. Okay? All right, guys. You have a great weekend. If you're in Discord, I'll see you guys in just a bit. Don't forget, if you're Tier 3, we've got our Makeup Elliott Wave session here in about 2 hours, 3 p.m. Central Standard Time, all right? All right, Andrew, we'll see you over there. You guys take care. Have fun. Hank, we'll see you next week, bud. Take care, everybody.